running. Okay. I saw your email. You sent through three assignments to go through. You said you wanted to go back to assignment one and then go through each topic. Even the questions you got right, we'll cover it and we'll discuss it. But you said theory we can skip. Is that right?
Yeah, so where it's like, what is IFRS 9, and then it asks um, for like a definition of something. That's not necessary.
Okay. All right. So then
But
let's.
yeah, I just thought
Yeah.
I thought this would be a good way because I know you sort of you have been giving me a bit of insight into sort of other content that I should know that I've maybe not been as familiar with, and that's
Yes.
all the way back in cash flows. And I've just thought it's actually going to be so much more helpful for me to just do this right from the beginning.
Okay.
Um, and then hopefully we'll reach cash flows again
Yes.
by the end of the fourth hour, which is next week, maybe after the 2 hours. But yeah, so let me not use too much time, but that's my thinking.
Yeah, it makes sense. So, as I said, if you have anything that you don't understand that you want me to revisit or go over, we can definitely look at it. So, I'm going to start with the first assessment. This was assignment one. I see it's a retake. I see you did quite well here, 56 out of 75. I don't know how many questions there are in total, but we'll go through them and we'll see. Okay, so you said this question is theory, so we can skip that.
Yeah, we can. Well, I wonder, sorry to maybe go back on that then. But I did actually, because the textbook gives you like a page of text where it
Yes,
speaks about a financial asset and whether it's fair value or
yes.
amortized cost, and if it's used for
Okay,
selling or if it's used for holding. And
yeah,
it sometimes is a bit confusing. So
okay.
maybe if you
All
could
right.
if you have any quick insight in.
Yeah. Okay, so I think I'll give you just like a bit of a snapshot of content in terms of theory for each of these different points. So when you're looking at disclosure, when looking specifically at assets, because they're financial assets, their value will fluctuate based on various different factors. So, for example, you did mention previously you covered time value of money. So, if you're looking
Yeah.
at, for example, like a bond, to value the bond, you'd have to present value future cash flows back in time to determine what the bond would be valued today. And obviously, that bond price could fluctuate based on the interest rate. So, what this question is basically covering is assets are measured at a specific value, and that value can be, as you said, different things. So net realizable value, fair value, market value. There could be different measures of value that you could use from an accounting context to account for the value of a particular item. Because here they're looking specifically at principal and interest, here you're looking at something that is paid off over a period of time. So the reason why amortized cost is the answer is because you're looking at the actual amount and the amount that will decrease over a period of time. So, for example, a bond would be a financial asset. You can hold bonds as an investment, and that bond will be valued based on the present value of its coupon payments as well as its par value. And that's why amortized costs would be applicable here because they talk about time value of money. Fair
Yeah.
value and original costs doesn't look at time value of money. Fair value is just look at a willing buyer and a willing seller. Original cost would be historical cost when, in other words, when I purchase that asset, there's going to be a cost associated with it. Right, so amortized costs, any time value of money scenario would involve some sort of amortization, depending on whether you're the buyer or the seller, or you're the person issuing the bond, or the person holding the bond. It would all depend. But yeah, this is a time value of money concept just applied to accounting in terms of valuations.
That helps quite a bit. Yeah, that's perfect. Thank you.
Okay. And then the same with this question, just to run through just a brief snapshot of the context that's provided here. When you look at the conceptual framework, here you're looking specifically at how information is presented in the accounting financial statements. So the question here was, how does the conceptual framework explain the role of stewardship? So stewardship obviously involves running a business or managing a business. So stewardship would be the owners directing the business's decisions in order to generate value for everyone. In other words, shareholders, stakeholders. So here they've gone with decisions relating to providing resources to the entity depends on the user's assessment of the amount, timing, and uncertainty of the prospects of future cash inflows to the entity and on their assessment of management's stewardship. Okay, so looking at that definition, if you're looking at the conceptual framework and how it explains the role of stewardship, remember, I don't know if you've covered any of the financial management modules, but there's a concept called the agency problem.
My first financial management subject is only after I passed this.
Oh, all right.
Yeah.
Okay, so yeah, then you probably wouldn't have an indication of that, but yeah, financial management talks about the agency problem because when you're looking at accounting record keeping, obviously shareholders own the company, but shareholders have directors, CEOs, managers running the company. So the stewardship is basically what you're looking at there in terms of ownership and how ownership differs from day-to-day running of the business. So decisions obviously have to relate to what's going to generate the most future cash inflows over a period of time, because that would be value, and value would be measured in terms of net present value, for example. Okay, you could discount future cash flows and you could see, is the business going to be worth more in the future or less? And you would use that as a basis to determine whether the business is being managed correctly or not.
Okay.
Okay. All right. I don't know what the question is here, but this looks like a disclosure question, and you got it correct. The statement of profit and loss and other comprehensive income just shows you operational transactions over a period of 12 months. And in that particular statement, you're disclosing income and expense line items. You should know what the basic accounting elements are. You get assets, liabilities, income, expenses, capital, and drawings. Those are the 6 main accounting elements. In this statement, they're disclosing income and expenses. In the statement of financial position, that's where you're looking at assets and liabilities with owner's equity summarized. And in the statement of changes in equity, that's where you break it down further. Cash flows is a separate calculation. Cash flows deal with inflows and outflows. That's a cash basis of accounting for transactions. Accountants provide for that, but it's not really their focus because accountants use the accrual principle. And the accrual principle is what's used in all of these 3. So SOCI, financial position, and financial performance, okay, these 3 financial statements disclose everything according to the accrual principle. The only one that doesn't is the statement of cash flows. And that's why cash flows is a little bit different, because you look at inflow and outflow or receipts and payments. Make sense?
Yeah. Okay, cool.
Okay, here, balance of shares to be disclosed. Okay, so if you're looking at the balance of shares to be disclosed, any balance is at a particular point in time. So your answer here is correct because financial position is showing you at a specific point in time. And your financial position can change, but it's at one point in time. So if they're asking you for a specific balance and it's looking at disclosure, the financial position would be the correct statement to look at in terms of disclosure for that particular asset. Recognition, okay, what does that mean or what does that entail? Recognition is when something should be recognized as something. So for example, an asset has to be recognized as an asset if it meets the definition. Right, so here they're asking you about, let's see. Yeah, they're asking you about definition of the accounting elements. Yeah, asset, liability, income, expenses, capital, drawings. Capital and drawings will fall under equity.
Yeah.
Okay.
Cool.
Right. If you're happy with these, then I'll go through it a bit quicker. If you need more detail, then just let me know and I'll elaborate. Here they said resources.
That question is the best definition of assets, so I'm okay with that one.
Okay.
I thought this template went better, but I see it didn't.
Okay. Fundamental qualitative characteristics. Obviously, qualitative characteristics is looking at other things that you can't measure numerically, in other words, quantitative. So, for example, rands and cents, height, age, that can be measured in quantity. Qualitative are other characteristics that add to the usability of that set of financial statements. So, you went with relevant and faithful representation. There's a whole bunch of them. Obviously, here they're looking at the fundamental.
Diagram,
yeah. Okay.
So that's good. Okay.
8 is looking at the objective. I think this is pretty straightforward. Obviously, accountants are there to provide information for decision making.
Yeah.
Okay.
Yeah. Cool.
9 is looking. Okay, I don't have the question, but if I look at the answer, they talk about the accounting financial reporting standards, IFRS.
Yeah, it's asking what's the purpose of the conceptual framework.
Okay. All right. So so when looking at IFRS is the rules that would be implemented. Okay, remember the framework would be like the basics, in other words, the foundation, and then off that foundation you get different standards. So the standards is basically the how to do certain things. That's why you get IFRS 9, IFRS 1, IFRS. There's a whole bunch of different IFRS. And if you do more accounting later on, you'll actually be required to purchase the international financial reporting standards. And then you'll study each of those different standards in more detail, because then you can disclose various assets or liabilities, income, expenses, capital drawings. Yeah.
Okay, cool.
Okay, number 10, the right to receive money in future is called, obviously, accounts receivable. That would relate to debtors. Okay, so debtors, accounts receivable. The reason why it's seen as a receivable is because there is a resource that's controlled because of that future economic benefit that will be derived later on. So if you have the right to receive money, that completes the definition of an asset. Obviously, the asset that would be applicable here would be debtors or accounts receivable.
Perfect.
Number 10, under what circumstances can profit on an entity instrument carried at fair value be recorded? Okay, so if something is at fair value means a willing buyer and a willing seller. So you've chosen the option when the equity investment is not held for trading. Right? If it's not held for trading, that means it's going to be okay. So not held. Okay, let me talk about speculative.
Yeah, so I got it wrong.
Yeah, let me talk about speculative, okay, versus held for investment purposes. So if you're speculating means you're hoping for that particular asset to increase in value. So that's buying and selling those particular instruments. Right, here they said when the equity investment is not held for trading. So not held for trading means you're going to be holding the asset for a longer period of time. If you're holding something for a long period of time, for example, a vehicle, how would you measure a vehicle on your statement of financial position? Well, what value would you use to measure the vehicle at?
It's
Think about
well,
PPE.
right word, selling value or realizable value.
No, not quite.
Oh no, sorry. It's carrying value.
There we go. Yeah. Okay, so that's disclosure from FAC 1502. If you're looking at something like property, plant, and equipment, there you're using carrying value because carrying value represents the actual value of the asset at a particular point in time based on how old the asset is. Here, they're talking about an equity investment. Okay, it'll only be carried at fair value if it's not held for trading. If it's held for trading, then you're looking at a mark-to-market type scenario, which is a bit different. Okay, if you're looking at equity investments held for trading, then that'll be seen as buying and selling a particular asset, okay, rather than holding a particular asset as a long-term investment. So if it's not held for trading, then it would be at fair value because fair value would be at a certain point in time. Okay, so under what circumstances can profit on an equity instrument carried at fair value be recorded? Okay, so under what circumstances? So in other words, when can you record a profit on an equity instrument? So for example, profit on sale of an asset. For example, if you dispose of a vehicle, you'll either have a profit or a loss on sale, and they'll be disclosed as part of the comprehensive income. Does that make sense?
Yeah.
Yeah, so long-term assets can have certain, let's call them adjustments, that will be accounted for in the accounting records. So when you're looking at investments that are not held for trading, those are long-term. And because they're long-term, you can then show either profit or loss on those assets depending on the fair value, because that fair value will adjust over a period of time. So you're not going to not show it, you have to show it. And every year the fair value might change depending on what's happening in that particular situation.
Perfect.
Okay, here they said in principle all income and expenses include income. Okay, that should be basic. Obviously that's disclosure. Yeah, that was disclosure. We spoke about it earlier. Statement of comprehensive income shows income and expenses because you're determining profit or loss. Which one of the following measurement bases is not categorized as part of the current value measurement based in the conceptual framework? Okay, that's a theory question. Okay, you've gone with transaction costs. Okay, so transaction cost, it would be something that would supplement the historical cost, because if you're buying a particular asset, okay, then you'd be using that as part of the historical cost. So transaction cost could be maybe like additional like delivery, for example, or it could be maybe like tax. So not categorized as part of the current value measurement
Value.
basis. All right, current value, because this relates to the past. It doesn't relate to now because it's a different point in time. Time value of money, T0, Tn. Okay, T0 is the beginning. So anything that happens at that point in time would be considered part of that point in time's cost. If we're looking at the current value, now we're looking over time. Then you're going to be looking at something like fair value or amortized cost, depending on the situation.
Okay.
Okay, here they're asking which is correct. Okay, that's also very, very self-explanatory. Financial performance is obviously a period of time, so 12 months. Even if you make sales at the beginning of the year, no sales during the year, that would indicate poor performance. So when you look at the statement of profit and loss, it's over time that's important, right? So over a period, okay, because it's looking at profit and loss. You don't measure profit and loss each day. You measure profit and loss over the month or over the year because it requires a certain amount of time. Financial position is at a specific point in time. Then we take a snapshot. Okay.
Cool.
Okay, here's that accrual principle we spoke about earlier. I think you're okay with that, right? Cash is the opposite, but that's looking at cash flow.
Yeah, fine with that.
Maybe just to mention one thing, income is recorded when it's earned and expenses are recorded when it's incurred. Okay, so the word earned and incurred are important. We're looking at accruals.
Okay.
A credit balance on a ledger account indicates liability or income. Okay, this is testing your rules. Okay, which side does assets increase, which side does assets decrease, etc. Are you familiar with those rules?
Yeah, I'm comfortable.
Okay, that's good. Yeah, you should have a snapshot or a picture of the rules that you can maybe use to apply it.
Yeah, I do have one.
Then you don't have to study it, but you should get better at doing workings. Okay, I see this is our first calculation. Here they're looking at which of the following alternatives represents the correct capital balance in the statement of financial position. So we're looking at capital. If we read the question, so remember, capital looks at equity. Depending on what type of business you have here, this is Elena's store. It's probably a sole proprietor. It could be a company, but because they're using the word capital, I would be prone to say sole proprietor.
Yeah.
All right, so if you're looking at her store, she had a balance of 100 during the year, revenue expenses amounting to 80 and 54. So obviously, revenue minus expenses will give you profit. So 80 minus 54 gives you what, 26?
26, yeah.
Yeah, so you would add 26. The owner conducted a stock take and realized that an inventory valued at 5,000 was damaged. Okay, if inventory is damaged, you'd obviously write that off.
Yeah.
Okay, the salvage value of the damaged inventory was estimated at 1,500. In addition, the owner withdrew 20,000 for personal use. Okay, so salvage value is what could you get if you had to get rid of that stock. Okay, so how much did she actually lose? What was her actual loss?
3,500.
The difference, yes. All right, so the loss was 3,500, and then there was a withdrawal.
20,000.
Okay, the withdrawal was 20,000. Okay, so you've got 100,000 plus 26 less 3.5 less 20.
Yeah, I think this one I was okay with.
Are you sure?
Yeah.
Okay.
Yeah, that was okay.
All right, I don't have a question for this one. This looks like a working for maybe VAT or VAT exclusive or something along those lines.
Let me find it quickly. It was
Okay, I'm going to open up the chat just to see what the question is.
a discount.
Oh, is it a discount question? It could be.
Let me quickly copy it in here just so I can read it. We can read it at the same time.
Okay, so it says 13th Feb. Okay, the wholesaler sold 1.5 worth of inventory on credit, subject to a discount. A cash discount of 15 will be given if the account is settled within 30. Which of the following amounts represent the correct amount received by the wholesaler on the 15th of March? So if you buy something on the 13th of Feb and you've paid for it on the 15th of March, would the discount apply? Yes, it would. So you would have to take off.
Exactly.
It was sold. It is subject to a trade discount and a cash discount will be given on the settlement. Here they said which of the following amounts represent the correct amount received. Okay, so if it's received by the wholesaler, you're going to take off both discounts. So if I grab my calculator quick, if I take 1,500, 1.5, and I times that by 0.75, that's going to give me the 1125. Then I'm going to get rid of another 15% discount, so times it by 0.85, and that gives me 956.25. Yeah, that's correct. Okay. Yeah, you have to take off both discounts because the one is a trade discount, so you get that automatically. And then the cash discount that's applicable to the settlement is a settlement discount, and that only applies if the timing is applicable. Does that make sense?
Yeah.
Okay. All right. Year end. The business owned by Mr. Zulu is the 31st of December. That's obviously the beginning of the year. That's the end. You received a statement from the municipality that showed that the company had overpaid. Okay, if you've overpaid something, that would be a prepaid expense. Do you agree?
Yeah.
All right. That's the thinking that you should be looking at when dealing with year end. Okay, when you're looking at year end, you should be thinking about adjustments. That's the first thing you should be thinking about. Just to revise theory, in 1502 you covered different types of adjustments. The main ones are prepaid expenses, accrued income, and income received in advance. There were others. Stationery on hand, for example, is also an adjustment. Even depreciation, any adjustment against an allowance for credit losses, perhaps, or an allowance for settlement discount, those are also considered adjustments at year end. Okay, do those ring a bell?
Sorry, I just lost the last little bit. I just want to close the door by me.
Okay, it's fine. Okay, when you're back, you're closing the door. Are you ready? When you're ready, let me know.
Okay, cool. I'm back.
Okay.
Sorry.
All right, so I was just saying that in terms of the year end, you've got certain adjustments. Those adjustments are either going to be a prepaid expense, an accrued expense, accrued income, or income received in advance. There are other adjustments like stationery on hand, or depreciation, or an adjustment against an allowance for something. For example, an allowance for credit losses or an allowance for settlement discounts. Here, they're talking about year end, and because you've overpaid, this would be seen as a prepayment because you've paid the municipality ahead of time. Then they say,
Yes, yeah.
you received electricity accounts for the 4 quarters starting 1 Jan and ending 31st December. Okay, so that was for the 4 quarters. So 4 quarters means this is everything that you have incurred in terms of your bill. Okay, the bill with the municipality. All right, because they've obviously billed you for electricity, and the 4 quarters are those. So you'd have to add all of them up. So if I grab the calculator, 3.5 plus 3570 plus 2750 plus 3000, okay, gives you a total of 12,820. Okay. Do you want me to write this down, or are you okay just discussing it? Discussing it is quicker. I can write them down if you want to. I do have an Excel spreadsheet open if you need me to keep track of all of these workings.
No, I think for these it's okay. I think when it gets into when we do the trial, use the trial balances and do that, then maybe.
Okay. All right. So this is incurred. Incurred means you've basically used water and electricity for that period of time. You received the accounts for the 4 quarters, and that's what they've given you. This is what they've billed you. This is what's incurred. So this would be seen as an expense. Does that make sense?
Yeah.
Okay,
yeah,
an expense for the 12 months. Then they say at 31st December, the municipal account reflected a balance of 2,000 owing. Okay, that's at the end of the year. Okay, so 2,000 would be owed to the municipality, so you have an outstanding balance. Okay, but they tell you that on the 1st of January, okay, you had overpaid 2,500. So that was the beginning of the year. Beginning of the year, okay, you overpaid 2,500. Okay, end of the year, you still owe 2,000. Right, they say which one of the following alternatives represents the correct amount that must be disclosed as electricity expense in the statement of profit or loss and other comprehensive income for that particular business. All right, so if I'm looking at what happened, okay, remember we're looking at a specific point in time. So from the start of the year all the way through to the end, okay, they're asking us to identify What does it say? Yeah. Which of the following alternatives represents the correct amount that must be disclosed as electricity in the statement of profit and loss and other comprehensive income? Okay, so if I'm looking at this scenario, all right, you can see you have 12,800, which was billed. Okay, that billed amount needs to be paid and it needs to be applied for that particular point in time. So this would definitely be part of the expense, okay, for that particular year, all right? If you've overpaid an amount, that amount would have been taken into consideration last year. Does that make sense?
Yeah.
Okay, so if I'm looking at 1st Jan and they said the statement received from the municipality showed that the company overpaid by 2,500, okay, then at the end of the year they show you that you are still owing a certain amount. If you've overpaid means that there's going to be a portion that's going to be applicable this year that you've already paid for last year. So I'm going to have to add that. Does that make sense?
Yes. Yeah.
Okay. And then if you're still owing an amount at the end of the year, that shows an accrual that needs to be provided for as part of this year's disclosure. So if there's a balance that's outstanding, that means I still have to pay for it. So that would be seen as an accrued expense. Because I owe 2,000 at the end of the year and I haven't paid for it yet, I've still incurred that bill. I still need to pay for it. So I'd have to add both. So you've added it. Did you add all of it? And then
I
you
did,
get that
yeah.
answer?
And then I got that.
Okay, that's good.
Yeah. Okay, cool.
All right. Okay, this is a theory question. They're talking about carriage and purchases here. This is probably looking at cost of sales.
It was the cost of inventories, yeah. And then I realized that I...
Okay, if it's cost of sales or cost of inventory, carriage and purchases is on the purchase of that product, so that relates to cost of sales. Carriage on sales would be a normal operating expense that you would incur separately and you would disclose it as part of your operational expenses in the statement of comprehensive income.
Yeah. Okay, cool. I got that.
All right. Okay, all right, here's disclosure. So for this one, you want me to do the long bit, yeah. Okay, so what do they want us to do? Statement of profit and loss and other comprehensive income. Okay, so let's go and represent that. Okay. All right, so this is a disclosure question. Which of the following alternatives represents the correct amount that must be disclosed as cost of sales? All right, so I'm going to draw up the whole statement of profit and loss.
Yeah, that'll help. That'll be good. Cool.
Okay, in terms of structure, how is the statement of profit and loss structured? What are the main points? Just give me a brief description of the template that you're going to be using in this particular disclosure question.
Revenue, cost of sales, and then expenses.
Yes, other income, other expenses, right?
Yeah.
Basically, and then finance costs.
They've got a long name for it. It's like administrative expenses or something like that.
Yeah, you can group different line items together to get different categories of income or expenses. That's possible. But yeah, a general template. So I just use a general template. Okay, we can adapt it for the question, but for now, let's just go with this. Okay, less cost of sales.
Yeah, this helps. I mean, I must have I've gotten lazy because we've never had to draw up the disclosure at any point because we only write on the computer in multiple choice. So I've always manually just tried to work everything out.
Yes, which is fine.
I've obviously got all the templates, but yeah.
Okay, yeah, this is a very basic template. Obviously, you can group things a bit better, but I'm just keeping it simple. Other expenses. And then profits before interest and tax. Okay, there might not be taxes. Is this a company?
I think at this point in the learning material, these were all sole proprietors.
Okay, yeah, I see capital here. No, this is a partnership.
Partnership, yeah.
All right, so there won't be tax here. Okay, so that's the basic disclosure template for any statement of profit and loss, other comprehensive income. You can categorize things a bit better. I would definitely use a template that you have either from the textbook or from the UNISA study guide just to highlight exactly what their requirements are. But because this is all multiple choice, it shouldn't be too bad, okay, to get the right answer. So I'm just going to structure it this way, just so you have an idea. I'm going to use this as a total column. And then this is a working column. Okay, so first thing I should do, okay, obviously if I'm looking at disclosure, I need to go through my list of balances and I need to see which line items are going to be disclosed in the statement of profit and loss and other comprehensive income. Because I'm looking at that statement. If I was looking at another statement, then I would look at those accounts. So I know I'm looking at income and expenses here. That's what's standing out. None of those are income and expenses except there. Okay, so now we've got them. So sales, in terms of disclosure, we would show it as 635290. Okay. Next is purchases. So because I see purchases, you need to remember your FAC 1502. When you see purchases, immediately you should be thinking about what inventory management system.
Yeah.
Which one?
I think they always use the same one. It's
which system uses?
perpetual.
No, it's the other one. Periodic.
Other one. Periodic.
Okay, so with periodic, there's a cost of sale formula. Cost of sales is calculated using opening stock plus purchases less purchases returns plus other costs minus closing stock. Right, that's how you calculate or determine cost of sales. Okay, cost of sales is calculated using a formula when they're using a periodic inventory management system.
Okay.
Okay, inventory is special. Inventory can be accounted for using two different systems. When I see purchases, immediately I'm thinking periodic. Oops, undo. Copy, paste. Okay, so purchases we've got in brackets here, the working 402,620. Okay. Drawings, I don't need any of that. A settlement discount that's received would be put under other income. But be careful. UNISA tends to disclose the settlement discount received against your purchases because discounts are received from who? Who do you get discounts from?
From your creditors.
Correct, from your creditors, right? And that's why they're inclined to adjust this. So depending on their working, okay, I'm just going to put a little asterisk here. Possible settlement discount received. Okay, I'm going to leave it under here for now. And then we'll see what they actually wanted just now. What is the settlement discount? 8360. Okay. Delivery on cost of sales. Delivery on cost of sales. Another way of describing that would be what?
Other expenses.
Carriage and purchases. Yeah, other expenses. So that could go under here. That'll be like carriage and purchases. So 1520. Bank charges would go down here. The bank charges are 3780. Your depreciation would also go here. The depreciation is 15,500. Your telephone is also an expense. That is 18,600. All right, we've got water and electricity, salaries and wages. Okay, the water and electricity was 17,520. The salaries and wages was 35180. And then the station that was consumed That's 1380. Okay, then you've also got financing costs here. Interest on loan would be finance costs. Okay, all right, so that's exam technique if you're doing this as a written exam. Okay, obviously the partnership agreement would be looking at the profit share, which is the not amortization, the appropriation. Okay, so because this is a partnership, there will be an appropriation of profits. Yeah, because you've got two different partners, so each partner is going to get a slice of that particular business's profits, and that'll be used here. Okay, I should actually move that one line down. Okay, so when you're looking at a partnership, obviously that partnership needs to account for its profits. That profit is then split between the partners in the profit sharing ratio of 2:1. So 2:1 would mean one partner would get 2/3 and the other partner would get 1/3. Does that make sense?
Yeah.
Okay, that's just working with ratios. Okay, interest. So when you have interest, and interest is applicable on the capital balances, this would be something that you would provide for in the appropriation accounts. Okay, because remember, or the statement of changes in equity. Okay, you'd offset that against the profit figure because remember, someone has to pay the interest, and if you're paying the interest to the capital accounts, then you'll have interest on capital here. Interest on capital would be inverted commas covered by the profits that the partnership created, and then only what's left over is what's shared between the partners. Does that make sense?
Yes. Yeah.
Okay. All right. Each partner is entitled to a salary. One of the partners is overseas at the moment, and he has already taken his salary for March. That will be drawings. Okay. So let me ask you a question. Do you show partners' salaries and wages here as part of salaries and wages?
No.
No, you don't. Good. Okay. Remember, partners are special because they're owners. Okay. So their salaries and wages will go into the appropriation account. That'll be separate disclosure, not part of operations. This is operations. This is what the partnership does in terms of the operations.
Yeah.
Okay.
Okay. Cool.
Year-end adjustments. On 1 March, okay, partners contributed 60,000 worth of inventory as part of his capital contribution. Okay, I assume these year-end adjustments haven't been provided for. They don't have any. Does it say? Yeah, it doesn't say anything. They've just described them. So I assume we still have to provide for this. This should be pre-adjustment. Does it say? No, it doesn't say.
Yeah, that's how I understand it. But that's how I understand it as well.
Yeah. So that would be my assumption as well. A pre-adjustment trial balance, and then obviously provide for the adjustments. Okay, so the partners contributed 60,000 Rand worth of inventory as part of his capital contribution. That is obviously going to be debiting inventory, okay, debiting the assets, and then crediting the capital. So your inventory will increase. Okay. Would this affect your cost of sales? What do you think?
I think yes, because it still would be included in inventory.
But that will be part of the closing stock that you count. Okay, so it wouldn't be seen as purchases because purchases have to be done with a third party. Closing stock,
not a purchase. Yeah.
Closing stock will be higher or lower based on that contribution. Does that make sense?
Yeah.
Okay. All right. On the 28th of Feb, the value of inventory on hand amounted to. So there we go. We've got something that we need. That looks like end of the year, 28th Feb. 1st of March is the beginning.
Yeah.
Okay. So you've got closing stock. All right. Land and buildings consists of an office. There was a loan. The interest is payable half yearly at the end of August and February. Okay, that's important. We need to do a calculation here for the loan. All right, so just check the question. The beginning of the year is 1st March, right?
I'll double check quickly, but I'm sure it is 1 March, yeah.
Okay, and then the end is 28 Feb 2022. All right, so that's the timeline. I'm just doing some time value of money here. And I'm working out the loan interest. So, okay, so All right, so we were looking at the finance cost calculation for interest. Here they said the long-term loan was obtained on the 30th of April 2021. April, March, so we've got somewhere here, 31st April. 31st April would be the same as 1st May. Does that make sense?
Yeah.
Okay, so it's basically May to Feb. Right, so the loan was acquired here. Okay, do we know what the loan was? We're going to have to go look for it. They said land and buildings was security for this loan. Okay, that's fine. We just need the amount. All right, it's 11% interest. And interest is payable half yearly at the end of August and Feb. So at the end of August it's payable and the end of Feb it's payable. It's payable half yearly. All right, so how many months do we have from May to Feb?
9, I think.
I'm counting 10 because you'd have to count May because it's the first. 30th of April. So the whole of the month would be 1 month. So May, June, July, August, September, October, November, December, January, February. I'm counting 10.
Yeah. Also got it with you there. Yeah, 10. Okay, cool.
Okay.
I see it does say the loan is 360,000 rand in the trial balance.
Yeah, we'll go and look at that because
matters.
we'll need
Okay.
it.
Okay, cool.
Yeah, you'll definitely need that. So where's it? Yes, yeah, 360. Okay, so the interest would be okay, so apply normal time value of money here. Oops, 10. Yeah, times 10 over 12. Okay, it gives you 33,000. All right, let's just double check that. 360,000 times 11 times 10 over 12. Okay, happy with that working?
Yeah.
All right, how much interest have you actually incurred? 14,000. So there's going to be an accrual here. Does that make sense?
Yeah. Of the balance.
Of the balance, yeah. So the amount here must be 33. Just double check. Is it 33? Yeah, 33. So 33. What's the difference? 33 less 14,400 is 18,600. There we go. Okay, so that would be an accrued interest adjustment that you have to provide for. Happy with that? Does it make sense?
Yeah.
Okay.
Yeah.
All right. The telephone expense amount includes 1,200, which is private telephone of Wind. An amount for Feb of 1,740 was received late and must still be recorded. Okay, so you have to take out. I assume A Wind was a partner. Let's just check that. Yeah.
Yeah.
Okay, so obviously you take out partner drawings. Drawings will be recorded separately. So telephone, where's telephone? Here's telephone. It needs a working. You're going to less 1,200 and then you're going to add what's still payable because that's an accrual. Make sense?
Yeah.
Okay, so this amount needs to change. The answer would be... Okay. All right. During the year, B received 5 as a travel allowance to attend training. He used 8 to pay for a COVID test, which was required to enter Namibia, 4,000 on meals whilst he was training. Okay, so obviously, what is this seen as?
That is a travel allowance. I had this question and I answered it.
It's a form of drawings, right? Because he's using money, okay, to attend a travel allowance. Remember, Blade is an owner. The owner is part of this partnership. So anything that the owner takes from the business for whatever, it would be seen as a form of drawings.
Okay.
Okay, because this is used as part of the owner's
I thought it would still be an expense for the business.
No, it can't be, because remember, this is
As
a
opposed to,
partnership.
okay.
A partnership is not a separate legal entity.
Yeah.
Okay, if it's a separate legal entity like a CC or a company, then you would disclose all expenses, even those for training that would be recorded separately.
Okay.
Okay.
Okay, cool.
All right, that was the last one. Okay, so now they're asking you about cost of sales. Right, we need our opening stock. We don't have
So
opening
just one
stock.
note, and I know, sorry to interrupt you. And it did catch me in the questions, but I think I got it eventually. Was there's a 200 that isn't accounted for in that?
Oh,
It's a
yes.
5,000 travel allowance, and then 800 to pay for the test, and 4,000 for the training, and then there was 200 that. So for some reason, I thought that went under drawings because he took that, and it wasn't a business expense. But I get you. I'm with you on the.
Yeah, it doesn't matter what he used the
maybe-
5,000 for, hey? It doesn't matter what he used
Okay.
the 5,000 for. Okay, the
Okay,
fact
so
of the
it's
matter
just
is
a
the
single
partner's
one, yeah.
taking money from the business directly.
Okay, cool.
Yeah,
Got
so
it.
if the partner takes money, so remember, partnerships are accounted for differently because it's a different form of ownership. When you're looking at disclosure in terms of the statement of profit and loss, you're only recording partnership specific income and expenses, nothing with the owner.
Yeah.
Everything
Okay.
owner related is separate. That's part of the statement of changes in equity.
Okay, cool.
Okay. All right. So question number 1 asked you to work out the cost of sales. Did they give us opening stock? No, they didn't. We need to go back and check. There must be inventory at the beginning. Yes, there is. There's it there. Do you see it? 6,100.
Yeah.
Okay, so remember, this is where I said you might have to take out the settlement discount if the option's not there. All right, so
Yeah.
let's see what we get. Okay, I'm getting that answer, and let's go check. Where are the options? Okay. See, they did take it off. Okay, they took off the settlement
But
discounts.
That's 8.3. That doesn't make up for that whole amount.
Sorry, let me just.
All good.
Okay.
See, I don't think it makes up that whole amount.
Okay, let's see settlement discounts. Okay, that gives us minus the 8360 gives you 389 380. Okay, they said the correct answer is 387 860. All right, let's see what the difference is. 387 860 less that 1520. It's probably
It is in your
delivery there.
It's actually
Delivery
in
of
your
cost
delivery.
of
Yeah.
sales.
See, I think we took that as carriage on purchases,
Did I
but
put
it's
it
actually.
in? Oh, yeah, I did put it
I
in.
think it maybe shouldn't have been there.
Other costs.
But I think it shouldn't.
Carriage on
I think it's not meant
purchases.
to be there. But that's carriage on delivery of sales. I think that's why.
Delivery
on
cost on sales.
on
Oh,
sales.
delivery cost
So I
on
think-
sales, not delivery cost of sales. Sorry.
Yes, yeah. So
Yeah.
I think that's a sneaky wording. Yeah.
Okay, you're right. Okay, so just be careful
then that makes
with the
sense.
interpretation. Let me correct that. So yeah, this, yeah. So NB carriage on purchases. That's what we need. Okay, yeah. So delivery cost on sales instead of delivery cost of sales. I think I read it wrong when I said it. I said delivery cost of sales. Yeah. Okay. All right. So yeah, other costs would be
Right.
0 here. If there was other costs, then you would include it. Okay.
Yeah. Got it. Okay, cool.
All right. Then that should be the right answer. Let's check. They said 3.8. I need to fix this. Let me just fix this. There we go. That's still there. 0. Okay. 387, 860. Yeah, that's right. Okay, so yeah, don't forget the
Yeah.
discount. And don't forget the all, and just read the question carefully. Yeah, make sure it's carriage on purchases and not So then, under here, we need to put that in. Carriage on sales.
Carriage on sales. Okay, cool.
Carriage, it was carriage cost on sales, I think that's it. They said,
It was
right?
delivery
Delivery
cost on
cost.
sales.
Okay, there we go.
Yeah.
Okay, that's fine, and we've got it there.
That was 152. Yeah.
Okay, let's see what else we've got. Next question. Which amount represents telephone? There's telephone, 19,140. Looks like you got that right. Yes, you did. Nice.
Yeah.
This one they wanted. Finance costs. You got 33,000. You got that right. Nice. 24.
Let me quickly check what that question was.
I didn't see the question. I see you got it wrong though. Yeah. 73,300. 73,300.
Yeah, it was a weird one. And even after looking at it again, I think I couldn't.
All right, let's see. Which one of the following alternatives represents the correct amount that must be disclosed as to okay, it's drawings. All right. Right, so when you're looking at drawings, you need to do a appropriation. Let me do it this way. SOCI. Okay, you'll have all these different columns for all the different partners. Okay, you'll have balance, beginning of the year, balance, end of the year. Okay, and then you'll have movements. You'll have profits for the year. Okay, and then obviously you'll have the different important columns. Okay, so I'm not going to draw up all the columns. You'll have one for capital A, one for capital B, then you'll have current account A, current account B. Does that make sense?
Yes, I've seen those. I've got
Okay.
them in my sort of templates as well.
All right, and then you'll have appropriation, and you'll have all these accounts. So it's just going to look something like that, basically. Okay, so I want appropriation and I want drawings. Was drawings accounted for separately? Let's check.
I think there was a line for drawings.
Okay, you've got capital. We might actually need this. I'm going to draw it anyway, because if they're asking about drawings, they're probably going to ask about capital. So let's see.
Yeah,
Okay,
it will help me as well just to see it.
All right, so we've got that. Oh yeah, they do have drawings. Okay. Drawings A, drawings B. Okay, and then you've got appropriation. Alright, so that's what the disclosure would look like for a statement of changes in equity for a partnership. Okay, so profit for the year, we'll need that, but let's put in what we do know. Okay, so this was list of balances at 28 Feb to 2022. So that is end of the year. So that would be down here. So capital for A, for B. Okay, we've also got drawings. Where's that? There's it for A and for B. Okay, that they told us was at the end of the year. List of balances at 28 Feb 2022, which is the end of the year. Okay, then there was a whole bunch of adjustments. Okay, we need to read these questions again. The profit sharing we do need, because the profit, we don't know what the profit is. The profit's going to be shared to each part. Oh, we actually need to show current accounts here as well, hey? You'll have current A, current B, but I see that they haven't given. Okay. Right, the current accounts show the entitlement, so then you would have a split in terms of the profit. So I'm just going to write that down in the terms of the profit sharing ratio. The interest we need to provide for, interest on capital, that's going to come out of the appropriation. Okay, and that's going to add to their entitlements. All right. Each partner receives a salary. Okay, so each partner is entitled to a salary. So each partner, so the partner, so you'll minus the total, and then you'll put it was 3,100 per month. So times 12. Okay, and then you would have that plus that. Okay, that will be against the appropriations. So salary will be coming out of the appropriations. That will be a negative actually. Current account will increase their entitlement. What else? One of the partners is overseas at the moment and he has already taken his salary for March. Okay, March is the next period, but he's already taken it, so he's drawn. Does that make sense?
Yeah.
Okay, so the drawings, so additional drawings. Okay, so additional drawings. Okay, so the additional drawings minus 3,100. He only took 1 month additional. That's going to come out of appropriation. That's going to increase the drawings for which partner? One of the partners. Okay, we don't know which partner. So, okay, we're going to have to add up the drawings together then, A and B. But yeah, you're going to have to add up. Okay, we don't know which partner. It could be A, it could be B. I'm just going to put it by A. All right. It could have been A or B, doesn't matter, but it's both of them, right?
Yeah.
Okay, one of the partners. Okay, then we've got the adjustments. Where was that other one with the drawings? Let's see. There. Okay, this was a contribution. That's not drawings. I think it was the last one. Yeah, it was the last one.
It was.
Okay, during the year, B received 5,000 as a travel allowance to attend. Okay, so if he received a travel allowance, okay, during the year he received it. So that's the same as like a salary. Does that make sense?
Yeah.
All right, so his travel allowance is going to come out of the appropriation account. So we're going to have minus 5,000. Okay.
Would you also include the line above the telephone expense, private telephone expense?
Yes, you would. Okay, that's another drawings line item. Yeah, anything related to drawings you have to provide for here. So yeah, let's just look at the travel allowance first. But yeah, you're right. Okay, so travel allowance, who was this for? This was for B. Okay, so that's going to come out of the appropriation and B would get the travel allowance. So he would get 5,000, but now we read it and it said he paid 800 for a test and is required to enter Namibia 4,000 on meals. Okay, yeah, so this is a interesting question because remember, if B is being given a travel allowance, that's going to increase their entitlement. Do you agree?
Yeah.
So they're going to be allowed an additional 5,000. Okay, then we need to provide for the drawings in terms of what they've used. So what did they use? They used the 4,800.
Yeah.
Because that was part of their training. So they've drawn, so you're going to minus, well, you'll add 4,800 drawings. Okay, the telephone expense amount includes 1,200, which is private telephone account for A. So it included. So we took that out. So if I take that out of telephone is a debit, so you would have to credit that account and then you would debit the drawings. So telephone adjustments. Okay, you took it out and you're putting it in. Okay, so looking at this, you've got those amounts that are being added, so we need to adjust these balances. So new balances, this is going to be sum up all of that and sum up all of that. Total drawings is going to be, okay, let's see what we get. Is it one of those options?
No, the answer is 73,300. That's
the correct answer is 73,300. What did I get? 84,100. Looks like we've taken too many things into consideration. If I add up those two amounts, what do I get? So without adjustments, let's just go without adjustments.
75.
Okay, without adjustments, we get 36 plus 39 is 75. They've got 73,
So like
300.
7 comes off.
So the difference, let's see what they wanted. 75 less 73 is 1,000. 1,700. Here's 1,700. So the telephone adjustment they didn't take into consideration. The telephone adjustment they didn't. Do you see that? They only took the 31 and the 48. They didn't take the telephone. Additional drawings. Drawings used.
Maybe they included it in the drawings, but then it shouldn't have been an adjustment.
Because this was used, so because they used it for training. Let's go back. During the year, Blade received 5,000 as allowance. So anything that he receives will increase his current. Okay. He used 800 to pay for the test and 4,000 on yours while he was on training. So that means he would have used it. He's taken it. So if he's taken it, he would have provided for it. The only thing I can think of is if we highlight those two figures.
Yeah, their difference is 1.7.
This drawings, okay, because they said he was given the travel allowance and then he used it for the business in terms of training. But okay, is this training for him or is this training for the business? It looks like it's training for him, so it would be seen as drawings. Unless it's company training, or not company, when I say company, partnership training.
Partnership training, yeah. Yeah, I think when I looked at it, it seemed as though they didn't include this in drawings.
Yeah, because the only thing I can think of here is if you're assuming this is an actual like separate expense altogether as a partnership. So the partnership has an expense rather than the training being B's own initiative. So okay, so
for him,
let me just like give you the two different views. Okay, so view number one. If you believe partner B has done training on his own accord, in other words, he's paid for his own training and it's unrelated to the partnership, then that would be drawings. Does that make sense?
Yeah.
Okay. If this is a business expense, in other words, the partnership has to train the partner because of whatever reason, then you can assume
sales training
that would be a specific expense for the partnership as a whole. In other words, the partnership as a whole, not as a separate partner. Does that make sense?
Yeah.
Then you would have to take it out. That's the only thing. So this would be I would have to check, maybe post this on a discussion forum and just ask the question, ask them for more clarity about this last one, because the only thing I can think of here is that if they've assumed that this was drawings and it wasn't, and they've taken it out, then if you take it out, you'd have to add it back. No? Let me think about this. If you're taking it out, you would have to subtract it. So you'd have to subtract 48, and then you'd have to add 1. You'd have to add 3.1. Does that make sense?
Sorry. Yeah. I lost you for a second, but
okay, I see a message. Okay, let me just repeat. If the drawings has already been taken into consideration, in other words, this 4,800 is already there. Okay, because we're assuming that this is actually a business expense and it doesn't relate to the owner himself, because the owner can go for training on his own, but then that'll be seen as drawings. Does that make sense?
Yeah.
Okay. Yeah. If it's not seen as an owner-specific account or an owner-specific expense, then it wouldn't be drawings and it'll be seen as a normal expense. Then that must be taken out of drawings.
Yeah, that makes sense.
Then if you take it out, you'd have to subtract it, and then you'd have to add back the drawings there.
This new one. Yeah.
Okay, that's the
And then that would
only
leave us with.
that's the only thing I can think of to get the answer that they're wanting. But again, I would want more clarity from them to confirm if that's correct or not. What did they say the answer was? Yeah, they said it was 300. Okay, yeah. But yeah, you'd have to ask them for clarity for this one. Okay, so I'm not too sure if that's what they wanted, but I'm just trying to get to an answer that we have there based on what I can interpret in the question.
Yeah. That makes sense.
All right, let's see what the next one is asking for. Okay, this looks like a separate question. Yeah, this is a new question.
Yeah, question 25.
Okay. All right, so we need, what do we need here actually? Let's just read the required. Total equity in the statement of change in equity. Okay, this is a nice question because you're going to be looking at the SOCI. So we're going to copy paste this. Okay, we're going to delete all these headings and we'll use new ones. All right, so anytime you have a SOCI question about balances for partners, you need to draw up this table. Okay, that I'm going to leave, the rest can go. Okay, actually, let's take out the interest. You might not even have interest. Okay, so let's go back to the top. Okay, so we have capital U, capital S. Okay, this is 30th of June, which looks like the end of the year because they said described at the end of the year here. So that would have been balanced at the end, so 90 and 70. Okay, see, here's the current accounts. Now you've got that in terms of disclosure. Oops, current, yes. Okay, so they gave this to you at the beginning of the year. So this is current account U. It's a credit balance. If it's a credit balance, it's positive. It's favorable. So it's positive. Current account S, it's a debit balance, so it's negative. So minus. Okay. All right, there's the drawings. So you need the drawings. Drawings U, drawings S. Okay. All right, do we have opening balance? No, we've got a closing balance. So that's going to be down here, 4590 and 7,000. Okay, what else do we have? We don't need any of that. There we go, profit for the year. Okay, so profit for the year. This is appropriation. Okay, appropriation has profit for the year amounting to 62500. Okay, all right, then we go look at the partnership agreements. Partners U and S share profits and losses in the ratio of 3:2 respectively. Okay, but let me just put that at the top here. Okay, so U gets 3/5. This is just maths, okay?
Yeah.
And S gets 2/5. Okay, with me so far?
Yeah.
Okay.
All good.
All right, the interest is calculated at 12% per annum on the opening balance of the parties' capital and current accounts. Did they give any additional capital? We need to check. Both partners are entitled to a salary. Okay, let's put that in already. Okay, let me just put here interest on capital,
Capital. Cool.
and interest on currents. Okay, then we've got partner salaries. All right, so both partners are entitled to a salary of 1,500 per month, so we need to put that in. Okay, appropriation, you're going to put a minus, open brackets. What is it, 15 times 12 times 2? No. It says partners are entitled to a 15,000 Rand per month salary. On the 31st of June, the partners were paid 10,000 each as their monthly salary. That seems very strange.
I think it's saying, if I remember this correctly, I also remember getting stuck here, that it was on the 30th of June, it actually, that they were each paid 10 instead of 15.
Instead of 15, okay, that's fine. Then we'll go with that. Okay, let's go with that. Okay, so
That's what I remember. Hopefully it doesn't go wrong.
Okay, it's fine. Current account salaries. Okay, so let's work out each of them separately. So you would have got 15,000 times 11 months, and then plus 10,000 in the last month. Does that make sense?
Yeah.
Okay, that's what you're going with interpretation. I would agree based on what we interpreted, and then the appropriation will be the two amounts together. Okay, that will come out of the profits. Okay, let's see. The information is yet to be recorded in the book, so we've recorded, that's fine. Okay, let's carry on. All right, Yu's mother decided to lend 100 to the partnership. This would be a loan to or a loan from. Okay, the 100 is along to, yeah, this is a loan to. This is something separate. This has got nothing to do with, this will be a loan. Okay, remember, okay, let me ask you this. If you have a partner and the partner has a mother and the mother gives money to the partnership, okay, is that loan coming from the partner or is that loan coming from a third party?
Third party.
Yeah, so if it's coming from a third party, then that'll be a loan to the partnership itself, not a loan from the partner, even though there is a link between the partner and the mother-in-law, but it's separate. Okay, so
Perfect.
this is something. Okay, the problem with this though is this profit for the year figure might have to adjust. That's my only concern. Okay, this figure might not be correct based on what we've got here. What did they say here? Its repayable first installment is 31st of June 2022. What year are we in?
2021.
22. Okay, then that's fine. It's not going to affect. Let's see when this was taken out. This was taken out at the end of the year. Okay, if it's at the end of the year, it's just going to be a new loan. That's not going to affect the profits. That's fine. There won't be any accrual here. Okay, that's fine.
Okay, cool.
All right. That's it. Yeah, that's it. Okay. All right. So the only thing we need to do now is we need to calculate. Okay, so capital, there was no additional capital. Do you agree? So what we ended with and what we started with was the same. Make sense?
Yeah.
Okay, so interest on capital will increase the entitlement. So you will get 10%. Is it 10%? No, 12%. 12% per annum on the opening balance of capital and current. Okay, so he's going to get an extra 10 and S is going to get an extra 8,400. Okay, interest on the current accounts. That was the balances. So you take the balance and you multiply that by 12% as well. Okay. All right. Drawings. There were no other drawings involved, so the opening and the closing would have been the same. Okay. We now need to split this profit. So this profit is going to be split 3/5 and 2/5. So this times 3/5, that's going to increase their entitlement. And this times 2/5. Okay, so then we can work out balances here. Let's sum up. Hold on. This is the profit for the year, but the appropriation is the salary because they need to pay that. We need to adjust this. I need to adjust this. This needs to be this plus this. And this plus this. Okay, so interest on capital will decrease the appropriation. So we need to subtract here. Minus. Okay, interest on current accounts. Okay, so the one, if you get something more, you will be entitled to more, so that'll be a negative. So the one must be a negative, and the other one must be a positive, so make them both negative. All right. Okay, so yeah, so minus 156, because S will pay the partnership. Does that make sense?
Yeah.
Okay, so that's coming out.
Debit balance.
Yeah. Okay, so this profit for the year, I need to delete this. Okay, appropriated portion. Okay, so what is the appropriated portion? We need to work this out. It comes out to that figure. So this must be a positive. Okay, that amount is a loss that's appropriated. Okay, because we've taken the profit for the figure, profit for the year, we've taken those other three things into consideration. Okay, we've worked out that amount, and in this amount we need to split. So this will be a loss, so it will be a negative. This times 3/5, and this will be a negative. This times 2/5. Okay, because appropriation must always land up at 0. That's something that's in the textbook, the study guide. Okay, appropriation doesn't have a balance, it's always 0 at the end. So these figures need to add up to 0,
Yeah.
do they? Where's my Excel? Yeah, it adds up to 0, that's right. Does it make sense?
Yeah, makes sense.
Okay, alright, so that means if I'm looking at those balances now, did this sum up the right accounts? Ooh, no, it didn't. Sum up all of that. Sum up all of that. Sum up all of this. Okay. Alright, so the total for equity in the statement of financial position is going to be capital plus, this looks like positive, so plus, is it a positive? Let's see, this is a minus, this will be plus, yeah, this will be a positive. This one also looks like a positive, so plus. Drawings will be a minus and a minus. Okay. Alright, so I'm getting that figure. Where is total equity? Which of the following alternatives represents the correct amount that must be disclosed in total equity in the statement of changes in equity for N? Okay. 161,300. Looks like they haven't taken the loss. There's no loss. The salaries. Let's go back and read the salaries. Both parties are entitled to a salary of 50,000 per month. Yeah, so 50,000 times 12 or times 11.
See if
plus
this
10.
works. See if this works. Do 10,000 times 12. I'm almost thinking what that's saying is on the 30th of June, which is their year end, it says they were only paid at 10,000 Rand a month monthly, as opposed to the 15 that they were entitled to.
Yeah, I'm thinking.
So if you change each of them
let's-
to 10,000 Rand a month, I think
let's
that
copy.
might reach the 161.
I'm thinking that this shouldn't be there. Delete. And I'm thinking this should be a portion. Let's see. Let's see. Yeah, no, you're going to get a very big number.
Yeah.
You're going to get a very, very big number. There must be a loss if you're making it smaller. Yeah, I think the problem is something wrong with the salaries. Let's just get rid of that. Okay, so everything we've done here is correct. It's just the salaries, I think, is a problem because the question said 15,000 per month or 10,000 per month. That's a problem.
Yeah.
I'm not too sure.
What happens if
which
you
one
make
we
it
should be
10
using.
per month?
If you make it 10 per month.
Yeah.
Okay, let me copy this. It's going to time out again soon. I'll restart it just now. Okay.
Okay, cool.
Let's just
I'll just join
let's just
straight
put
after.
12. Let's just put 12 times 10, so 120,000.
Yeah.
What's
And
the
then
total?
you'll just
gonna
need
be?
your sum again.
Looks like it's still the same amount.
It can't be there because it would have reduced.
Okay, so yeah, we just need to check the working then. If it's not right, let's see. Does this still add up to 0? Looks like it, yeah, that still adds up to 0. It split it. Let me sum up everything. Yeah, looks fine.
How is it getting the exact same number if the salary is reduced? That's weird. Oh, because it would work into the appropriated portion probably. So it would work back and then it would balance out to the same total.
Because this one still stays there. That's just smaller. This is bigger. But the rest is still fine.
Yeah, so it actually ends up being exactly the same.
Because this is 63,800. This is 63,800. Yeah, this one you're gonna have to ask them for it. Do you have the textbook? Can I show you a textbook? Can I show you a working for this, just to make sure that you understand the workings for this for this particular module? Okay, so I'm just gonna open up. Let's just open up. Where's the study guide here? 2020. I'm gonna open this one up. Okay, just so you have an idea of how this functions as a working. Okay, so when you do partnership questions, let's just go to the partnership section. This is changes in ownership. No, not changes in ownership. This is the financial statement. This is page 45. Okay, that didn't work. It needs to be 55 then. Let's try. Okay. Alright, here's the partnerships. Okay, so when you have a partnership, if you look at the disclosure, let me show you a disclosure question. Here. Okay, there's an example of a partnership statement of changes in equity for the year. There's the total equity. Okay, there's the appropriation. All right, so with the appropriation, whatever profit you make, okay, the profit needs to be updated based on things like salaries to the partners. You have to take that out. Interest on capital. You have to take that out. Interest on current account. It could be plus or minus depending on the situation. Here, both partners had a credit balance. Do you see that? If they both have a credit balance, then it's going to subtract. It's going to come out of the profit. Does that make sense?
Yeah.
Interest on drawings, you would add it back because the partners would effectively pay the partnership. Any commission, take it out, pay it to the partner. Drawings, take it out, okay? So then this appropriation account, only what's left over is shared. Do you see that? Okay, so when you're looking at a situation like this, okay, the opening stayed, closing was the same. Drawing stayed, that was the same. Okay, so in between is what we're looking at. So the profit for the year was given in the question. Okay, that profit, any interest on capital will be paid to the partners. So we add it to their accounts, we subtract it from the appropriation. Interest on current accounts, there was a positive balance here, so you would subtract, and there's a negative balance here, so you would add. So subtract 300 plus 141 gives you negative. That's correct. Salaries, the salaries you would add to their entitlements. Okay, and then you would subtract the total from the appropriation. It comes out of the appropriation. Right, then whatever's left over, what is left over here? It was negative 16856. That's going to be shared amongst the partners. So when you share that amongst the partners, whatever it is, you're going to split it. Okay, 3/5 for that partner, 2/5 for that partner, and then you're going to sum up all of those figures. When you sum up all of those figures, you're going to get that total. So those are the balances at the end. And then to get the total equity, you would add up those two, you would add up those two, and you would subtract those two. Does that make sense?
Yeah, it makes sense.
Okay, yeah. So the working here is fine based on what we've read here. I do think there's a problem there. Do we use the 15 or do we use the 10? Is the 15 per month or is it 15 once off? Maybe it's not per month, maybe it's per annum. I don't know.
No, I think it is per month. I'm just
But then you're
wondering
getting a
what.
loss, you're not getting a profit. That makes no sense. Yeah.
Yeah.
You're paying more salaries than you are in terms of the profit. This is very unusual. Seeing such a big salaries figure, seeing such a small profit figure. Because remember, the salary would be based on the profits, because then you're basically running the partnership into a loss. And then the partners are
Yes.
basically
Yeah.
paying the loss. The
Yeah. It's
partners are paying
confusing.
a loss for the partnership, which doesn't make any sense. Basically, they're paying themselves.
Yeah.
Yeah, so
Sure, I'll just hope them that they don't include
I don't know if
an
this.
adjustment like that in the text.
Yeah, remember, this is the problem with some of these questions. Sometimes there are issues with the actual question. I don't know if there was errata for this assignment or assessment. Was there any errata?
No, there wasn't for this. But
There wasn't.
oh, man, I'm trying to think how it worked down to a lower amount. But anyway, I'm happy with sort of what you've done for the working for me to be able to apply it.
Yeah, I don't know what else we could provide for in the question. Maybe the 100,000 perhaps, but as I said, the 100,000 is a third party. It's got nothing to do with the partners themselves.
Yeah.
It even says it's a long-term loan with the partnership. So, yeah, that would be separate. It wouldn't affect this.
I'm happy with the working you've given
Is that all
me,
right?
and then to move
Yeah.
on. Yeah,
Okay.
I'd
But
rather
yeah,
not sort of
look at the
go there.
workings you've got in your study guide, because these ones have everything. Okay. The principles are important. That's important. So if you get a
Yeah.
question like this, but please don't just leave it, rather raise it with them. So for this question, maybe ask them about the salary story, okay, or ask them about the working. Because they've given you an answer, they must have a working for this. They can't just give you that and say, okay, that's the answer. The thing is, how did they get that answer? They need to explain it. They need to give you a working for it. They normally do.
Yeah.
Normally, they in the past they used to send them little pink letters with the answers. This was when everything was printed. Now I think it's all electronic. Do they still courier the printed books, or
Yeah, I've
do
got,
they?
and I used like tables that you showed me. I've got very similar to that, but I
Okay.
can't remember seeing an actual answer. And the forums are crazy, so I don't.
Oh.
Maybe they. But I'll look. I'll see if I
Try.
find something.
Yeah,
But yeah, I
try.
think you.
Yeah, try get a working for this in terms of the interpretation, because it needs to be better. This one you got right. There's the drawings. Where's my drawings? Okay, so how did you get that right? What was your working?
Coming now. I just want to. Sorry, I was just checking if there's anything on the forum. I
Because
don't see anything.
looking at this, I don't see anything else other than what we looked at. I don't see any
So
additional drawings here.
for drawings, I think what was the final amount? The 251.
This was drawings at the end. There's the drawings at the end. There's the drawings at the end. There were no adjustments. Or are we missing adjustments? Was this it? Was this all of it?
That's why I'm thinking the salaries. If you add the salaries to those adjustments.
Let's check.
I think I'm gonna get the right thing open here again quickly.
Because you got the right answer, but now my question is, there was no other drawings in this question. Where did you get the rest of the drawings from?
Yeah, I'm not. And see, my working out would have been on a notepad somewhere.
Because
why I've started using Excel.
if you read all these adjustments, there's no additional drawings anywhere here.
What about the salaries to the partners?
The salaries were paid. Okay, if it's paid, then you could say that they've drawn it. That's fine. But then we need to add them all up. So let's see what we get. Okay, that's a valid.
It's not actually an adjustment though, but I think that's what I would have used.
It's a payment. So if you've paid it, it'll come out of cash. So your salaries here, you're saying they've drawn the salaries.
Yeah, that's
what you're saying.
That's what I might have worked it out as. Yeah, but that comes to 350, and then how would it come down from there?
Because we went with 11 months at 15, and we went with 1 month of 10. Remember that?
What if you go not using 15? So what if you use 10,000
At
rand a month?
120.
That makes it 200. It makes it 240 because it's for two partners, right? And then plus those drawings that you have just above, that actually gives you the total, I think. So if you had to sum all of that up, it would give you the 251.
Yes, okay, that worked. Okay, so that means, okay, so now we're getting somewhere. So UNISA doesn't want you to use 15,000, so we can delete that. Okay, now we
Yeah.
know based on the second answer, 10,000 per month is the salaries.
Yeah, it's just very poorly worded.
Okay, so now we know. Now we can correct this because we've got something in the next question. So let's correct that. Let's fix that. Okay, so now you know that 120,000 came out, okay, and it came out of appropriation, okay, because it needs to be provided for, but they've paid it as well. So if they've paid it as well, we need to add it there. And that would be drawing. So they're entitled to it, increases their current account, but because they've paid it, they've drawn it. So
And then the appropriation becomes 0.
So let's sum up this. Hold on, something's wrong here. Let's do that again. Oh, because of this working, I'm going to delete that now. Oops. Okay. We know what we need to do. Okay, so that needs to delete. Okay, delete. Okay, let's fix that now. Okay, so yeah, we're fixing this. Okay, let's do that again. All right, this drawings figure was what? 4590. Okay, oops, 7. There we go. All right, so now we can sum up those two. And sum up that one. Okay, and then we need to fix this now. So, profits, interest, salaries. That gave us that figure. That figure, we've split it. That still gives us 0. That's fine. Okay. Then we've got capital, current, and then you've got the drawings that they've subtracted. I'm getting that. If I take these two out, let's see.
I was going to say, wouldn't the appropriation be 0? But then it gets us back to 212.
120. Yep, same thing. Still the same negative.
But that one minus and the other one added. Oh, no, that's right. So
yeah. Okay, so at least we're getting somewhere in terms of the working. So yeah, I would still want them to give you a detailed working for this one. Okay.
Yeah.
This one you can calculate based on the 10, not the 15. So you have to use the 10.
Yeah.
If you use the 10, then that's fine. Then you can get the 215. Not 215, the 251.
251, yeah.
Yeah, okay, so that's fine. So I can understand why you've done it that way, but that means you had to use the 10, not the 15. And you said that they paid this. Actually, I've got an idea here. The partners are entitled to a salary of 15, so I'm going to put the 15 here times 12. Do you see what I'm doing?
Yeah, so you're gonna
and I'm going to make
drawings
this
less than the
120. Yeah. Because remember, technically you could be entitled to more than what you draw. Does that make sense?
Yeah, so their current account balance would be higher.
Correct. The current account entitlement would increase, yeah. But see, the problem with this is it's 15,000 per month. This partnership only made 62,500. That's why you got to share a loss. You're actually splitting a loss between the partners. That doesn't make any sense. This is something that I'm concerned about because as I said, you can't share the loss. It's basically you're paying yourself basically in this situation, but through a partnership. So the partnership's not making anything, but then you're entitled to salaries. So you're going to increase the salaries, but then you're going to decrease the loss, and then you're going to take on the loss. So in other words, you're going to be landing up with less.
What if you have to look at, because if I think the capital amount that they were looking for was the total equity was 161 or something. So what if you add the starting capital, which gives you 150, and that leaves a balance of 11 something to try and see a 160, sorry, where the extra could possibly come from, because it's a positive that increases by 1,000 and something.
Yeah.
Somehow.
Yeah, but we're probably going to go in circles if we did it like that.
Yes,
So,
agreed. No, agreed.
I think the best approach would be, okay, so now we know they wanted you to use 10 there. That's fine. I'm going to keep it as 15 here because of the current account. Does that make sense?
Yeah.
And then just provide for the appropriation at 360 and then update it so then they share that loss. And then those were the figures I would use. Yeah.
Okay.
Okay.
Yeah.
Equity as a negative, that's very unusual. That shouldn't happen.
Yeah.
We already know there's a problem somewhere in the question here. Okay.
Alrighty. Yeah.
All right, but what we've done here is correct. It's just this is my concern. Okay, this loss, this is very like suspicious. It's strange that they've given you a scenario like that, because normally the profit is bigger, because remember the profit needs to provide for all of these things. So
Yes.
this to me seems very unusual. Unless we had to adjust the profit. Did they say we have to adjust the profit? No, we didn't. They said it was 31st June, and they said that was the profit for the year.
Yeah. No, I don't know.
Okay. All right, let's carry on and see. But yeah, I'm going to save this working. Let's leave it as is. Let's go see what other workings you had to do. Okay, here's a PPE disclosure question.
Cool.
All right, so property, plant, and equipment. This you could also draw up a note actually if you wanted to, and then do balance, movements, balance if you want to, but you don't have to. Okay, movements would be depreciation, additions, disposals at carrying value, and then you would have all your assets. So in this question, are we using the same balances?
Yes.
Okay.
Yeah,
All right. So it's the same question. We're just using the PPE. Okay. Here's vehicles at cost. So you'd have a vehicles column. And you've got, that's it, only vehicles. Okay, yeah. 96 was the balance at the end of the year, because this was 30th of June, yes. So depreciation, I'm actually going to add an extra 2 lines here just to show the working. Okay, vehicles cost was 96, accumulated was 11.5, so the closing balance would be this minus that. Okay, what else do we have in the question? Nothing there, nothing there, nothing there.
it was just the loan. I don't think there was anything else.
Yeah. This was on the 30th of June, but did they buy the land or they wanted to buy the land? To buy the land. So that means they've bought the land. Would you agree or not?
Well, it's only in the next year, so they've got the loan and they're still need to buy the land in the next year.
Okay, so you're not going to show land and buildings plus 100,000, right?
No,
yeah.
I wouldn't say so.
Okay, so then that's it. There's nothing else here. So then you're going to go with 84,500.
84,500. see.
Okay, it
Yeah,
is there. That's
okay,
good.
cool.
Okay, that's fine. All right. This one you also
Let me
got
see
right. I'm missing the
Let me
question,
see
though.
what that. I'll tell you now.
Okay.
It was this. Which one of the following? Pasting it.
Which of the following alternatives is the correct amount of which says is trade and other receivables in the statement of financial position? Okay, nice question. That's disclosure against your allowance. So you would have trade receivables minus any allowance. Did they give you an allowance here? Yes, they did. Okay, yeah, these are easy,
So credit
simple
losses.
disclosure
That was
questions.
an easy one. Yeah.
Yeah, so extract statement of financial position. You would show it like this: 38,500 less the allowance. The allowance wasn't adjusted for. If they did give you an adjustment, you would provide for it, but they didn't, so you would just show it as is 32,240.
Cool. And I think that one was correct.
Okay. All right. What is the next one asking for? 38,240. Yeah, nice. You got that right as well. This one you also got right. Which of the following alternatives represents the correct amount that must be disclosed as cash and cash equivalents, or the bank overdraft? Okay, so you went with that option, which is a favorable bank balance. So that means there is cash in the bank account. If we check your working, let's see. You would have gone to the balances. You would have looked at bank here. Bank is a debit. There's the debit balance.
And that was it. And there were no adjustments. Yeah.
And there weren't any adjustments. Yeah. Okay. Yeah. Wow. These are nice questions. Sure.
I hope more of them are.
Very easy. Yeah. No working at all. It's just
I
interpreting.
think sometimes they're quite nice and they just want to give us marks, which I'll take.
Okay, nice. And then what else is there? Okay, the last one looks like it. Is 30 the last question?
Yeah, it is.
Okay, the last question says, assuming that the profit available for distribution to partners is 20,000, which of the following represents the correct balance in the current account of Sparrow? No answer here, hey? Okay, so let's see if we can work out one of them.
Sorry, I'll tell you what the answer is.
It's okay, tell me just now.
The answer was 68. Okay, cool.
All right, 68. But you got 68 right.
It was E was the answer, 68056.
Okay, this one. All right, so they're telling you that make the distribution 20. Okay, so where's that big working? Here's the big working. Okay, we had 2 because of the salaries. We were practicing. So I'm going to use this one. This was the one that we said was... Okay, let's paste that. Okay, so here they're telling us to use... Assuming that the profit available for distribution to partners amounted to 20. So... assuming that that's available 20. So 20 is going to be distributed. So you're going to have, that should be a minus 20 here just to make the formulas work. Minus 20, so then that will be plus plus. Okay. Everything else will stay the same. Except we can't have a negative 366, so this needs to change. Okay, there's a 0. Alright, let's just work out all of that. Oh no, I still get a sum of 23144. Okay, they're telling you assuming that the amount is distributable is 20,000. Assuming that the profit available for distribution to partners amounted to 20, which one of the following alternatives represents the correct balance in the current account of Sparrow? So the current account of Sparrow, so this guy. Okay, we need to put his 180,000 in.
Yeah. Entitled.
Then we can minus his drawings, 120. Minus his 120. Let's see if that works. What answer do you get there? You get 75,056.
It looks like you're going to... Ooh, there's 10,000 too much. It's meant to be 60. No, not 10,000. It's meant to be 68,056.
Yeah, so less drawings here.
So
So
there's
offset
7,000 too much.
offset the drawings. Okay, so they said everything else is still the same. So the balance for S, was the balance for S correct? Let's check that. What is S's balance?
I think he was the one with the debit balance. Yeah.
Yeah, it
Debit
was
balance
right.
one,
So
two.
debit is negative, that's fine. Interest on capital, that was the capital. That was 12%. Yeah, that's fine. Interest on the current, that was also 12%. That's also fine. The salary was the 18,000, 180,000, which was 50,000 times 12. Appropriate portion was the split. So if they make a profit of 20, they each going to get a portion. So we said they're going to get 8. And then we offset the drawings of 120. Yeah, I'm getting, let's delete these
You're getting
answers.
75.
Equals the sum of all of that column. What does it give me?
Oh, does it give you that? Okay.
Equals
And that's
sum.
meant to be
Yeah, 66656.
okay. That's meant to be 68,056. So there's 2, 1.
Yeah, I can't change anything else because everything else is in line with what we saw here. Oh, the interest on capital. Oh, hold on a second. I deleted everything, so that was a problem. Okay,
What about his drawing?
the formulas? The formulas were updating here, so delete that. Okay. Okay, so what is the sum up? Yeah, 75056.
And then if you remove the drawings from that, you get the right answer.
What do you mean remove the drawings?
So there's 7,000. That's not. It's 7,000 short of the answer, and his drawings are 7,000, or his or her, whatever. Yes.
Oh, this
so anywhere I can
there.
see, we would get. Yeah. So anywhere I see, we'd get to 68.
Remove the opening balance for drawings. Minus. Yeah, so if the appropriation, if it's 20,000 here, then it's okay. And then looks like they've offset the drawings. So these accounts they've actually closed off. They've closed off these accounts. Offset the drawings. I should actually say close off. Close off the drawings. They've closed off the drawings to the current account instead of disclosing them separately.
Cool.
Alright, sure. So it is possible to get that answer, okay, based on that working. But yeah, that had to assume a profit that was distributable, that was 20,000, which was given in the question. Okay, so that shows you that all of this must be correct. The problem is this. That's the issue.
Yeah.
So let's go back and see if we can correct this based on what we now know, because now we know what the issue is here. So I'm going to quickly copy paste this and let's see if we can get it.
Cool.
Okay, so we're looking at calculating the total equity. Okay, that was the question that we had earlier. So we are happy with the 10,000. I'm going to delete that. We are happy with this. We are happy with this. Now we know they're offsetting the drawings against the current account. So they're going to be subtracting all of these amounts. But we've added these amounts there, so we are going to subtract it anyway. Yeah, so whether you leave it like this or whether you update the account, so for example, current U, current S, right, so even if we reduce by the drawings and the opening balance, all right, then I'm just going to take a minus here and a minus there. Does that make sense?
Yeah.
Yeah, so then, but then you're still going to get the same, you're going to just get negatives here. And then you're just going to have to add capital. So the capital will stay the same. So then total equity would be the sum of all of that. Okay, yeah, no. See, same thing, eh? Yeah. Yeah, there's definitely an issue with this line item because having looked at the last question, all of this must be correct. Do you agree?
Yes. Yeah.
All right, the only problem is this. If you assume the 20,000 here, then you can get a perfect answer in line with what they got. The only thing is that we have to offset the drawings, which we showed separately, but if you take it off, then you're going to get a balance. So the answer that they're saying is correct is fine, okay, based on what we know. The issue when looking at it previously, if I'm calculating the equity, this is definitely a problem, yeah.
Yeah.
Okay. Yeah, so I'm going to ask you to just find out from them if there was anything else that you needed for this question. Yeah, because this already stood out as a problem. The profit being so low and the salaries being so high and then appropriating such a massive loss. That doesn't make sense, yeah.
Yeah. Okay. Cool. I'm with
Okay.
you. They usually do respond on email, so I'll drop
Okay.
that in there.
Try it. You can use these workings. I'll send it to you, and then you can keep it as a basis for your query. All right. How are we doing?
Awesome. Yeah, that's our
Okay.
session.
All right. Yeah, at least we managed to get through this whole thing, yeah.
Yeah.
Okay. What
Thanks.
was
It
the
helps a
next
lot.
one?
So
What was the next one looking at? Was it the same context or was it different? Probably like CCs maybe or companies, eh?
I can quickly have a look.
I'm curious to know how they're assessing it, yeah. Oh, and while I've
Assessment
got you on the
2 was
line,
partnerships.
yeah.
Yeah.
Did I send you the video from last week? I can't remember if I did.
Is it not in the same drive folder? Because you sent me a link, I think, to the.
Okay, I'll check
drive
again.
folder
I'll
at
see
some
because
point.
I remember uploading it, but I don't remember if I assigned you access. But I'll do it again. I'll check it today because I'll do it for this one as well. So I'll upload this video and then email the notes that we used. Okay. All right. What was
Okay,
2
perfect.
looking
Yeah.
at? Is it different, eh? Very different or very similar?
Oh, sorry, no, I'm just checking because it's a video. I'll get back to you on the video. I think it's shared from a different.
Okay.
So anyway, sorry. Let me quickly check.
Yeah, I see CCs here. I see traders. I see
Starts off with the partnership.
Yeah.
So we could, for instance, not do the partnership, although they do record different transactions and they do like.
Yeah.
We could skip
Here's
things
profit
then,
and
like
loss.
cost of sales, for example. But I see I got a depreciation question wrong, which I'd like to know what I did wrong.
Yes. Yeah. So
I mean,
think,
either way, even
yeah.
if there is some duplication, it will still help me if we
Yeah.
run through it next week.
Yeah. We can definitely run through it. I'm just wondering, like, how did you do here compared to the other one? This one you did? Oh, pretty much the same, eh? 52, round about the same. You're getting 70s for all of them, which is good. That's a good result. So yeah, you're doing fine. I think maybe we can focus on the incorrect answer, but you want me to go through all of it, which is fine. I really don't mind. It's up to you. You can decide what
It helps. It helps me because I then sort of do the same on the sheet, and then I get used to how to sort of record it properly. So exactly how we did it today helps quite a bit.
All right. Okay, great. Yeah. If you're happy with that approach, then we can continue doing it that way.
Okay, awesome. That sounds great. And then I'm definitely keen for next week, Wednesday again.
Okay, Sean.
It's the first.
I'm fine with that if you're okay. If you feel you've got enough time from now until then to also go over some content.
Yes. Yeah.
Have you submitted
Yeah, it's all good.
the first three? So it's just what, 4 and 5 left to do. How many did you say you have in total?
There's one assessment left.
And that's assignment 4, and that's the final one.
No. Assignment 4 was the cash flow one, but we did a session before I did that assessment.
Okay.
I'm still waiting for the results there.
Okay. And then 5 is
And
the
then
final one.
assessment 5 is the final one, which incorporates everything. So the only stuff I wouldn't have gone through with you would then be whatever's in assessment 2 and 3.
Okay. All right.
We might not get to 3 then, I suppose, but let's see how next week. Let's see
Yeah.
how it goes. I mean,
Yeah, I think something to consider, maybe if you're okay with the correct answers, maybe start with all the incorrect answers. Maybe like next week we can do 2, do all the incorrect answers, and then go to 3, do all the incorrect answers, and then come back and then look at all the correct ones.
yeah, that's also great. We can do that.
Yeah, because at least then you've got workings for the ones that you maybe struggled with. Because the ones that you got right, I'm sure you got them right and you understood it. It's just maybe revision and going back and trying to understand what did you do in terms of the working.
Yeah, true.
Yeah.
True.
All right. So maybe let's take that approach
Alrighty.
next week. At least then we can get through 1, or we can get through 2 and 3, and at least that covers both in terms of incorrect answers. And then we can go back to either 2 or 3, depending on which questions you want me to look at in more detail. And we can do it from the beginning of the question to the end to show you how to do the workings.
Yeah, that sounds good.
All right, but yeah, I'm flexible when it comes to the approach. I just want to use the time that we have as best as we can. So I'm just thinking of different ways to approach it, just to make sure that you get the most out of the session. Yeah.
No, that's perfect. I'm happy if we tackle the incorrect ones, and then we could always see what time we have left afterwards if I have any other questions.
Okay, sounds good.
Alrighty.
All right,
Awesome.
Sean. Thank you, and have a good week. And then I'll probably send it out later this week or even early next week. Sorry, I sent it a bit later, but yeah, I'm confirming now. It's confirmed for next week. I'll just send you the invoice later on in the week or early next week.
Okay.
Okay.
That's perfect. If I know it's coming, then
Okay.
great. I'll block it out.
All right. Thanks,
Cool.
Sean.
Enjoy your evening.
You too. Keep well. Okay.
Okay. Cheers,
Bye.
Anthony. Bye.